Let me tell you about a stock I believe could help investors build serious generational wealth. But first, let me ask you a quick question. Have you ever taken a vacation to one of those trendy, overhyped places where everyone is going? It's packed, it's hot, everything's overpriced, and the experience ends up being totally underwhelming. Well, the same thing happens in the stock market. When something is already popular, when everybody's already bought in, the big gains are probably long gone. The real money was made by the people who got in before the crowd. That's how we made big wins with Palantir, up over 1,400%. Same with Nvidia. I talked about it 3 years ago, and since then it shot up over 1,000%. But this isn't about bragging. It's about why that strategy worked and why it can still work today. It all comes down to this one principle. Invest in the picks and shovels of the next gold rush. Think back to the original gold rush. Who got rich? Not just the folks digging for gold, it was the people selling the tools, the boots, the tents, the shovels. That same concept applies to today's gold rush, AI. Right now, everyone's chasing the flashy stuff. Apps, chatbots, large language models. But the real opportunity? It's in the infrastructure, the tech powering everything behind the scenes. That's why Nvidia was a big win. It provided the computing power. That's why Palantir mattered. It helped companies make sense of the data. The question now is, are there still companies out there that are quietly powering AI's growth without all the hype? Yes. And I've been watching them for months. Earlier this year, we looked at Constellation Energy, a utility stock that powers data centers. It's up nearly 50% since March. Then we highlighted Vertiv Holdings, VRT, a company supporting physical AI infrastructure. That one jumped 18% in just a month. And now there's a third company I want to talk about. It's up 5% in just a few days, but most people still aren't paying attention. While everyone's focused on Nvidia, Palantir, and OpenAI, this one is quietly becoming one of the most important players in AI. Let's break it down. To understand why this company matters, you need to understand how AI chips are made. Think of the process like baking a cake. You need a recipe, that's the design, ingredients, the materials, and an oven, the factory or foundry, this company. They write the recipe. The company is called Cadence Design Systems, ticker CDNS. They lead the world in EDA, or electronic design automation. This is the tech that lets engineers design, simulate, and test chips before they're ever manufactured. It's like a flight simulator, but for semiconductors. Why is that a big deal? Because building a chip is expensive. If a company makes a mistake in the design and doesn't catch it early, they can lose hundreds of millions of dollars in production costs. Cadence lets them catch those mistakes ahead of time. And here's something else. Cadence is fully integrated with TSMC, the biggest chip foundry in the world. So when companies use Cadence's tools, it syncs perfectly with the factory that actually builds the chips. There are only 3 companies on Earth that do this kind of work: Cadence, Siemens, and Synopsys. And Cadence is outpacing the competition in just about every way. Let's look at the numbers. 1. Revenue growth, Cadence up 20%. 2. EBITDA growth, Cadence up 20%, while a key rival was negative 16%. 3. Operating income, Cadence up 24%, the competition down over 8%. 4. Free cash flow, Cadence is up, the competition is negative. 5. Operating margin, 30% versus 20%, it's clear. Cadence is dominating. Why? Because they're not only the most complete solution, they're also the most innovative. They're already building next-generation tools, like photonic chip design, which is expected to be the future of high-performance computing. Cadence is essential. The biggest tech companies in the world, Apple, Meta, Google, need Cadence to build the chips that power their AI. Now here's what really caught my eye. Despite all of this, Cadence stock has barely moved in the past year, only about a 2% gain. That's nothing considering the explosive growth in AI. But guess what? Company insiders have been buying. In the past 6 months, insider buys have doubled compared to insider sales. That's a strong signal. And this sets up what I believe is the perfect situation. 1. A business that's getting stronger. 2. Revenue and margins growing. 3. Dominating its niche. 4. Working on the next-gen tech. 5. But the stock price is flat. Eventually, the stock price will catch up with the business fundamentals. It always does. It just takes time. Cadence checks all the boxes. 1. More cash than debt. 2. 85% gross margins. 3. 30% operating margins. 4. 20% revenue growth. 5. Low customer churn. 6. Multi-year product cycles. 7. Built-in price increases. Once a company signs on with Cadence, they rarely leave. The system is too good. Too integrated. Too valuable. And Cadence knows it. You're looking at a business that plays a mission-critical role in the AI industry. It doesn't rely on hype. It doesn't need flashy headlines. It just delivers results, and companies keep coming back. This is the kind of stock that quietly builds real wealth over time. Cadence isn't just riding the AI wave, they're building the foundation it runs on.